Nearly half of Burkina Faso's youth are unemployed. This is the urgent reality as of June 30th, 2025. In this West African nation, 45% of young people can't find work, a crisis that fuels instability and deepens poverty. The economic challenges here are not abstract. They're daily struggles for survival in Ouagadougou and rural villages alike. Burkina Faso is rich in gold and cotton with a young, eager population, but faces deep structural problems. These are now worsened by insecurity and climate change. High unemployment and crippling interest rates form the core of this economic storm, creating a vicious cycle. Without jobs, people can't save or invest. Without affordable credit, entrepreneurs can't create those jobs. This paralysis affects everything from putting food on the table to providing healthcare and education. For 23 million people, the stakes couldn't be higher. As we explore Burkina Faso's economy in 2025, we'll see how these issues intersect and compound. We'll examine the data, hear personal stories, and analyze efforts to break the cycle. The world often overlooks struggles like these, but they shape the future of global stability. Understanding this crisis is the first step toward change. Burkina Faso's economic crisis is a web of interconnected problems. First, youth unemployment. Nearly half of young people are out of work, turning a demographic dividend into a potential disaster. Frustrated youth are vulnerable to extremist recruitment, making this a security threat as well as an economic one. Second, the cost of capital business loans often exceed 15% interest, choking off entrepreneurship and innovation. Small businesses, the engines of job creation, are starved of affordable credit. Third, the economy is dangerously undiversified, relying on gold and cotton. Price swings or droughts send shockwaves nationwide. This stifles the growth of other sectors that could provide stable jobs. Fourth, insecurity militant violence has displaced millions, shut down farms, and severed trade routes. Economic activity is taxed by constant threats, raising costs and deterring investment. Finally, climate change, desertification, and erratic rainfall devastate agriculture, forcing rural populations into overcrowded cities. Each of these pain points amplifies the others, creating a cycle that's hard to break. The result is a nation struggling to support its people. Climate change is not a future threat here, it's a present disaster. These challenges demand urgent, coordinated action. The numbers tell a stark story. National unemployment is 20%, but for youth aged 15-24, it's 45%. Nearly 1 in 2 young people seeking work can't find it, a trend worsening over the past 5 years. On the credit side, business loans average over 15% interest, sometimes over 20% for small borrowers. Compare that to Ghana's 12% or single digits in developed economies. High interest rates make starting a business nearly impossible. Imagine a young entrepreneur needing a $2,000 loan. Annual interest alone is over $300 in a country where average income is less than $900. High unemployment means little savings, so banks have less to lend, driving rates even higher. Political instability and security threats make international lenders wary, further constricting capital. This cycle, few jobs, expensive credit, traps the economy in stagnation. The data reveals not just a problem, but the mechanics of a trap. Breaking out requires more than just hope. It demands systemic change. Behind the statistics are real people. Meet Aissatou Diallo in Bobo Dioulasso. In 2023, she tried to start a mango processing business, seeing opportunity in local abundance. Despite a solid plan and a business degree, banks rejected her loan applications, no collateral, too risky. Today she's still unemployed, her entrepreneurial potential wasted. Her story is echoed by thousands across the country, each rejected loan a lost chance for jobs and innovation. Now in Kaya, Ousmane Ouagadougou fled militant violence, leaving his farm behind. He spent years searching for work in an overcrowded town, finding only occasional day labor. Ousmane's story is shared by over 2 million internally displaced people, once productive, now dependent on aid. Conflict has destroyed livelihoods and flooded urban labor markets. These stories show how insecurity and lack of credit crush opportunity. The economy loses not just businesses, but the ripple effect of jobs and hope. Displacement has shattered rural economies and strained cities to the breaking point. The human cost is immense. Each lost opportunity compounds the crisis. These are the faces behind the numbers. Burkina Faso's crisis is rooted in decades-old structural issues. Underinvestment in education and vocational training leaves youth with degrees but few job prospects. The result? A mismatch between skills and market needs, fueling unemployment. Weak governance and corruption push most businesses into the informal sector, 90% of the economy, where productivity and wages are low. This limits tax revenue and public investment, trapping the country in a cycle of underdevelopment. Since 2016, jihadist violence has dismantled rural economies, targeting schools and infrastructure, making business impossible in many regions. As a landlocked, undiversified economy, Burkina Faso is also vulnerable to global shocks and regional instability. Reliance on gold and cotton exports ties the budget to volatile markets. Internal weaknesses and external pressures combine to create a perfect storm. The government and international partners are responding, but progress is slow. Youth employment programs like PAID offer vocational training and entrepreneurship support, aiming to bridge the skills gap. Efforts to ease credit include microfinance and partial loan guarantees, but high interest rates persist. International aid, hundreds of millions from the World Bank, African Development Bank, and UN, supports food assistance, climate resilience, and essential services. Projects like rural infrastructure rehabilitation and cash transfers help, but insecurity limits their reach. Development can't happen where conflict rages. Aid is concentrated in safer urban areas. The most vulnerable are often the hardest to reach. National policies and international aid are vital, but their impact is constrained by violence. The paradox: those who need help most are left behind. Lasting change requires security and stability. There's no single solution for Burkina Faso's economic crisis. Recovery starts with security. Peace is the foundation for all progress. This means not just military action but political dialogue, stronger state services, and addressing local grievances. Next, invest in human capital reform education, focus on vocational and technical training, and align skills with market needs. Foster entrepreneurship, and make it easier to start businesses. Unlock the credit market, lower interest rates, expand credit guarantees, and use financial technology to reach more people. Affordable capital is essential for job creation. Ultimately, a new social contract is needed, one that offers security, education, and real opportunity, especially for youth. The international community must move from short-term aid to long-term investment. The challenges are immense, but the resilience of the burkinabe people is strong. With the right mix of security, investment, and policy, hope can return to the Sahel. The story of Burkina Faso is not yet written. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.